Hey guys, you guys ready to do this? We are absolutely going to talk about Fibonacci retracement. It's one of my favorite topics, guys. And I promise you, if you don't know about retracement, the charts will feel like enslavement. How low will it go? Will it go to the basement? Will it slam down on the pavement? Now let me make a statement. It's not there for entertainment. If not used properly, the charts will feel derailment and me displacement. You must practice it every day to not be complacent. I want to make sure you're well off into retirement. Let's practice this every day. I want to make sure you get the payment. Drop the mic, everybody. Drop the mic. So yesterday, I think we left off at ETP, right? So I think we should probably say hello to ETP like this. Hello, ETP. I was wondering how low you're going to be. Let's say hi to my friend Fibonacci, so you can tell us how low you will go. Okay, guys, that is enough horsing around. We are now going to go over Fibonacci extensions. So let's talk about Fibonacci extension. You guys might have heard me talk about some things before, like measured moves and targets, right? Well, how do I obtain these targets? These Fibonacci retracement numbers, they're a sequence of numbers derived from the Fibonacci sequence, right? And they give you a specific ratio. Now, those are applied. So when we do Fibonacci retracement, so there's two terminologies, right? One is Fibonacci retracement, and that tells you how much it traces back to the original position. And then after that, there's another one called Fibonacci extension. So you can find both of these tools over here. This one is the trend-based Fib extension tool. I put a little star on both of them because I use them quite often. So I've got mine basically right here next to each other, right? Fib retracement and trend-based Fib extension. Now, what trend-based extension tells you is it gives you something called a measured move. And it tells you how much something is going to move just based on percentage. So let's give you guys a really clear example. And we're going to talk about some specific rules as well. So let's remember from yesterday, if you guys remember the lesson. So now that we're fairly well versed with Fibonacci extensions, or sorry, retracement, we're now going to talk about these extensions and how they're used in everyday situations, okay? So remember how I mentioned that if we use Fibonacci and this retrace down to the 0.5 level, that would be called moving back down and retracing 50%, right? Well, let me ask you guys a rhetorical question. So if after it reached here and it moved back up 100%, the exact same wave as this one, how high would it go? Like if this price action was like $80, we'll say, okay? And the next move up was the exact same move, how much of the price would it move up as well? If you guys answered $80, you are absolutely right, okay? So let's just pretend that I'm gonna right click on here, and then I'm gonna click on clone. Would you guys agree with me that this is an exact move? After we finish this wave coming down, the next one going up like that is the exact same strength and price as this one, right? Because these two are equal, right? Just like that. So what if it moved 50% of the way? Well, if it moved 50% of the way, then it would only be half of it, right? It would be basically this distance right here, right? So this would imply it only moved 50% of the way. What if it was 3/4 of the way where it moved? So if it only moved 3/4 of the way, it might be somewhere around here, right? The 75% level, right? So right here, let's just say, for example, this is 50% of this wave, right? This one would be about a quarter. This would be 50%. This would be 75%, and this would be 100, right? 100%. So whenever they say it's making a measured move, which you guys might see me right often, right? Like this, measured move, 1-to-1, measured move 1-to-1 Fib extension. So if you guys ever see this annotation, what it means is that the next move that it made will also move 100% of the previous leg, just like that. So from this point where it starts correcting, it moves 100%. Now let me show you how we use Fibonacci extension to do this. So Fibonacci extension, you click on it first, and then you have 3 points. You have points A, you have points B, and you have points C, right? Point C. So you have the beginning of the wave, you have the top of the wave, and now you have the support level, the lowest possible point. So what you do with trend-based Fib extension is you choose the first point A, you choose the second point B, and then you choose the third point C. I just got to turn on some features here. I disable them sometimes by accident. There we go. So now what you guys will notice is a bunch of numbers. Let me do this again really slowly so you guys can all make sure you understand it. First of all, when you have your Fib extension, you choose your lowest point of the wave to the highest point of the wave to where it moved back and it retraced. So we're basically using a combination of two things, right? This one is your Fib extension right here, right? And this one is telling us it retraced back to about 50% level. That's a Fibonacci retracement. Now, what this is doing is it is taking the length of the wave, so of the up wave there, all the way down to right here, and it's creating a ratio, which we won't get into the numbers. It's creating a ratio, and it's telling you the distance it could move by percentage-wise. So just if you look right here, these numbers right here is 1, right? This number is 1, which means that it will move 100% of this wave. And I'm going to clone it just to show you. Whoops. Yeah, okay, so if I got a 1-to-1 measured move, then what it would mean is it would move the exact same distance by 100% of the previous move. Now, what do you guys think that 786 means? It means that it actually only moved 78.6% of the original wave. What about 61.8? That means it would move 61.8% of the original move. What about 0.5? So 0.5 would mean that it's moving 50% of the move, right? And what about the 326, or sorry, 236? That would mean that it's moving 23.6%. Now let's just give a few examples before we jump into it. Let's say that this one retraced a lot more, all the way down to possibly down here, okay? We always want to check, first of all, how much it possibly retraced to. And this one, we'll say it retraced down to the 786 level right here, okay? So we know 786. Now we're just going to pull up the trend-based fib extension, this one here, and then go to point B, and then go to point C. You can double-click on it, and you can move it from the left to the right. I move mine to left to the right, wherever. It depends on the situation. So if I put it on the left there, you see the numbers on the left. If I move it to the right, you see the numbers come to the right. And the background, it'll highlight a color for you if you want. Some people like it slightly visible so they can see what zone they're in. Personally, myself, I just keep it like this to keep it very, very simple. I like to keep my prices on, right? Some people only like to keep the percentage. I like to keep my prices. You can also turn on the percentage if you want, but to me, it doesn't really matter. I just know, right? Like 618 is obviously, like I'll just keep a percentage just to make it easier for you guys as well. And I also like to keep the price on it because it tells you right next to the percentages what level it retraced to. So now let's say that it retraced the first time down a lot more, okay? So we're now going to take our A point to B point to C point right there. And now what we noticed is if it went up to this 100% number, what that means is it made a measured move of 1-to-1. I'm trying to clone it here. Okay, I'm gonna try to clone it, bring it over there. So it means that from this wave, it's taking the length of this specific wave here. So 1-to-1 measured moves means it's going the exact same distance as the previous leg. And these are very powerful extensions, right? We follow a lot of simple rules, such as let's always assume, first of all, a 1-to-1 extension. It doesn't always hit 1-to-1 extension, but it sure darn comes close. Now, a typical rule to follow is that wave 3 is often the longest, but never the shortest, okay? It's never the shortest. So if we have only the first wave, which is this one right here, and then we have the second wave right here, we can automatically assume that it might attempt a 1-to-1 ratio. There are rare times where it does fail, but there's also multiple times where it actually gets way higher than that as well. So for example, it might actually go up all the way up to this one right here, which is 161.8%. And you guys have to be very, very sure that you understand what this means, okay? This wave right here, consider it 100%. Now, if we're saying that this one also moved 100%, it means that it is 100% of this wave right there, okay? Of that specific wave. And if it moves 61.8%, then it only moves to right there, okay? And then if it moves to 168%, which is very possible, for a huge wave, then that one would move 168% more than this specific wave right here. So let's get into some real life scenarios of how Fibonacci is used. So I'm just choosing ETP because yesterday that's where we left off, and I'm going to choose a bunch of random charts as well so we can all get used to it. So first of all, what we notice for here, excuse me. So let's say we know that this is point A, and that's point, actually, where is point A? Where do you guys think point A is first? Answer it to yourselves. This is how we try to focus and improve our learning, right? So point A would be right about here. So always draw and label your point. So that would be point A, right? Right there. And where do you think point B is, the next highest point? It's probably up there, right? And the lowest point? Probably down here somewhere, right around there. Now I'm going to show you guys how to draw it as well. I'm just going to draw like just a random wave like this. So you don't always have to choose exactly where it started, as long as we're on the same horizontal line like this, okay? As long as we're on the same horizontal line. So you don't have to click right there. Sometimes I want mine very far to the side, so I'll click here. Right? And then you don't have to choose right there. You can also click right here, for example, far away. And then you don't have to click right there. You can just make sure it's on the same horizontal line and you should be good. So sometimes I like to keep mine far, far to the other side. So what I'm getting to is that we see this point right here, right? This point here. So we don't have to click right there exactly. Heck, we can start it here if we want to. We can start it here as long as it's on the same line. So let's just draw it, say here. Now we draw it, say, to where roughly point B is. Take a gander, right? Just, say the highest possible point. So right around there. See this candle there. And then now to the lowest point where we see it correcting after the uptrend finishes, right? And we see it finishing right around here. This is still part of the uptrend, so we won't count that. So it will be after the highest point, basically, which is after here, you choose your next point. And we notice that it's about right here. Yep. So right here, that's C, that's B right there, and that's A. So what we always do is we target a 1-to-1 ratio first. And that's how we figure out, guys, where do we sell, right? So if I take my Fibonacci extension from A to B to C, what I automatically notice right away is that this is going to be a pretty decent buy zone. So what I do when these waves are formed is I just clone this, not that one. I clone it and I plan ahead and I just do this. And I say to myself, okay, this seems like a very viable target, 1-to-1, right? It might undershoot, it might overshoot. Let's give us a little bit of a range. So now we're going to apply the same concept right here. Pretend we didn't even see that going on. Pretend these haven't even formed yet. You take your Fibonacci extension and you're just going to draw a box to the 1-to-1 area, okay? And that's where you're going to target to sell. And surely enough, not only did it hit it, but it was awesome that it hit it, right? it hit it right around there. And these actually act as a resistance and as a support. So if you'll notice here, it shot through all of these, right? All of these numbers here, but where did it hesitate and eventually come back down? It came back down at the 100% level, right? So what this means is that the distance from here to here, right, is actually the same price as from where this one here finished to right around there. Now, another way of doing it is to draw a box, go to your price range tool. I don't remember where it is. Price range right around there. I hotkey mine right here. I just want to show you where it is. So I click on price range here, and I make a box from the beginning to where wave B ended, and I will use this right here as my target. So I will move it right from here, actually. For example, if you see this right there, just put it to the bottom. What a lot of people like to do as well is they like to leave it right here on the top of where the breakout starts, right? So it's fairly subjective sometimes. It can give you a good range. So let's say you took a range from here, okay? Let's just say you took a range from there, and then you also moved to the higher point, right where the breakout started. So you can actually increase your range box to get an average of where you would buy. And that's what a lot of people do, guys. What they'll do is they will take, when they see it consolidating here, it's clearly consolidating on the uptrend, right? They'll buy there, and they'll just, they'll buy here, and then they'll just set a stop limit, a stop sell limit right around the $100 range right here. Or not the $100 range, the 100% range. And surely enough, if you guys entered that position, right, to say you entered around here, you would have made 10% profit. That's a big profit, guys, huge profit, okay? Now, I'm gonna write up some rules for you. So for wave 3, a normal target is about 1.0, just a target. These are guidelines. They're meant to be broken often. It could fall short or it could go really long. It's about 1.0 fib extension, okay? Now, if wave 3 hits about 1.0 fib extension, then wave 5 can hit 1.618 extension. Now, this is a rule that I follow very religiously, okay? Very, very religiously. I apologize if I even said if I brought religion into it. If anybody was offended there, I don't mean to be. So let's say now, okay, that we follow this rule. If wave 3 hits a normal extension of 1.0, right, which it did right here, 1.0, right around there, which we see it hit, then it will be traced all the way down over here. And then the next wave going up should hit about 1618. And what do you guys notice it hits? 1618. Isn't that beautiful? You guys wouldn't even believe how many people have no idea how simple this is. The way I look at charts, I just use Fibonacci all the time, and it nails the targets. And once you learn how to use it really well, it becomes quite easy, guys. So the way I play is I will show you how I will play it from the beginning of this one here, okay? Let's say this one, I usually don't catch this wave. It's not important to me. What's important to me is I find the baseline support, right? How far did it come down to? How far did it come down to? Right around here. So what I'll do is I'll take my Fibonacci retracement first to see how it goes. So I make a mental note for myself, but I'll write it out here. I will make a note of wave 2, retrace little. Therefore, wave 4 should retrace more. Retrace at, we'll say 0.382, okay? Therefore, retrace more than 0.382, possibly up to where point B, like this point right there, up to where B terminates, I guess you can say, or tops out where point B tops out to a possible 618 fib. So this is my rationale, okay? So whenever we trade, we never want to enter a position and just hope. I'm extremely busy throughout the day, and I apologize if I don't tweet to a lot of people to reply back, but it's because it requires a lot of analyzing, right? So we don't just look at the charts and just buy into a position and wait. A lot of my time is spent analyzing and planning and solving problems, and that's what charting as a technical analyst is. It's solving a bunch of problems. Imagine it as you have a lot of skills and weapons at your disposal, and you're playing a game. Sometimes in any game, it's more important to use different abilities and different skills than other ones, right? Because it might be suited best. So a lot of my time is spent analyzing and making sure that I'm doing it properly. The way I see charts is as a complex puzzle. I see it as a really difficult puzzle, and I love puzzles, and it needs to be solved. That's why I have a crazy addiction to Fibonacci and using them, because I find confluence in these charts, and it's a beautiful thing, guys, when you play the perfect 5-wave structure, okay? Imagine yourself as an athlete, and you just had the game of your life, and it feels very rewarding inside. It just feels really good to know that, hey, I've made the right plays. And this one, guys, is one of the ones where I made the perfect play. I do them not often, right? Not often because I don't have the energy to do it and the time. So just as an example, okay, like if you want to play the perfect play here, we're talking about looking at a time frame up to 18 hours, right, guys? That's a really long sports game that you're playing, right? You think of any sports game, and it lasts 2-3 hours, right? And believe it or not, it's just as intense when you're trading because you require lots of thinking, right? And as a student, I'm sure a lot of you guys are students and can relate as well. There's no way you're going to pull 8-hour studying sessions, right? It's just too exhausting. And that's the thing about pulling a perfect play. It takes a long time, and it's a marathon, and you got to really put in energy and focus. You got to make sure you're well nourished. You got to eat well. You got to sleep well as well, okay? Excuse me there. So make sure that you guys are taking breaks in between as well when you're trading. So I just had some water there. So it's rare enough for us to play the perfect wave, but this one here, like it was definitely pretty close. And I sat there and I monitored it for a long time, and I made a very good profit off of it. And I would like to show you guys how I did it. Okay. So as soon as this formed right here, I said to myself, this is where I started to enter around 325 or so, right? Right around here is where I started to enter. And that's where I started making the calls. So I noticed that this retraced 382, and I made a note to myself, wave 2 retraced little at 382, therefore wave 4 should retrace more than 382, possibly up to where point B tops out, to a possible 618 Fibonacci level. So we know that wave 4 never retraces to the territory of wave 1. That's where it ends, okay? I'm just calling this ABC right here. Just call this ABC so we can know where to set our Fibonacci, right? So this is actually wave 1 right here, and we'll call this wave 1. And this one is clearly wave 2. Well, actually, all of this is wave 2. All of this is wave 2. But what I like to do is that'll be wave 2 guaranteed. But you always take Fibonacci from the lowest point of all of the wave that's correcting, okay? So what I did was, right here, for example, okay? And I'm going to say to myself right now, next step is this. So this is my step 1 thinking process, right? This is step 1. Sorry about that. Step 1. That's my thinking process right here. Now, step 2 will be for wave 3 going up. I'm going to write all of it. Step 2. For wave 3 going up, let's use a general target of 1-to-1 fib extension, okay? 1-to-1 fib extension. So what we do is we take our fib extension, we click on the lowest point here, the highest point that we see for wave 2, and then the lowest point that we see during all of wave 2, okay? Now, before even going there, this was going to be my target. And this is how I do all of my analysis that you guys see, okay? I will choose right here, okay? I will choose just a general range right here, a general range. Now, what a lot of people do is they take, for example, they take a range, right? They'll just use this price range. They'll do this, for example, right? And they'll move it to where this point is right here. I don't want to see that yet. To the bottom, that's the lowest point, right? Right there. So we take the lower bottom there, and we also do to the breakout right there to get an average. So now my box is actually right there. So I'll do that again for you. They'll take the range. They'll first of all create a box that's the same height, or sorry, as the price, as wave 1 going up. And then they'll take it, oh geez, I've been smoking. Then they'll put it right here to the lowest point, right there. Then they'll make a green box that will touch just the top of it. And then they'll do it on the breakout as well, right here, right on the breakout to make sure this corner touches it. And then we'll move up this green box to the top of that one. And that gives us a range, right? That gives us a range, which we'll just slide over to over here so I can't see it, right? Let's delete this. And that's where we would target to sell. And guess what? Right there, okay? Right there. Perfect, okay? That's what happened. And now I refer back to my step 1. My step 1 is wave 2 retrace a little at 382, therefore wave 4 should replace 382. So now we've actually nailed our step 2, which is it nailed right there, our target, okay? And now we're going to refer back to step 1, and we're going to say, okay, well, this is wave 3 right here now. This is wave 3, we just finished it, okay? And now what I'm going to do is I'm going to assume that wave 4, this is wave 4 coming down, this is wave 3 that just finished, right here. This is wave 3 right there, okay? Make sense? So we have 1, 2, and 3, and now we're going to assume, hey, wave 4 is going to retrace more than 382 because wave 2 retraced a little bit there. So now we will take our fib retracement one, okay? Fib retracement one right there, all right? And I'm going to assume that it's going to come down more than 382. We can't really see it right now, but I'll pull it up over here. Okay, I'm going to delete all of this now that we're done that section. I'm going to move this to the left side so we can see it. So you take your retracement from the bottom to the top, and then what do we assume, guys? We assume that wave 2 retraced 382, so then we will not assume, we know wave 2 retraced 382, so now wave 4 coming down will retrace more. And what we're going to basically say is this. I'm drawing it wrong there. I have to draw from the bottom to the top, sorry. Yeah, bottom to the top always for an impulse move up. So now I know it's actually going to retrace somewhere here, right? We're going to assume to somewhere to a possible 786. So I'm going to assume that this is the lowest point it can retrace to, and I'm going to assume that it's going to retrace more than 382. So why not just use a guideline like right here, okay? We'll use the panic number, if you remember. 786 is a panic number, and I'm just going to move my box over to over here before it even happens, and I'm just going to set up some laddered buys in case it does, because you want to average out your price, right? You want to average out your price and just get the best possible one for when people dump. So I'll set up my buys all like this, okay? Now ready? We're going to move over to the screen, and we're going to see what happens next. Ready? Right? Boom, that's what happens, guys. So now all of my orders have officially filled because they're dumping into it, right? So there you go. That is how we target it coming down as well now. Okay, great. Now that we know that this is now 4, right here, that's now 4, and it actually retraced exactly where we wanted it to, okay? it retraced to pretty much the 0.5 or the panic zone, which was more than that, okay? So now we're going to do a few more rules. And this is the step 3 rule. And this step 3 rule is pretty awesome. So now that wave 3, sorry, I skipped a step actually. For wave 3 going up, let's use a target extension of 1.1. And we're gonna do this. We're gonna put in a rule that says if wave 3 hits 1-to-1 fib extension, then wave 5 can possibly hit 1.618 of wave 1-to-2 fib extension. Okay, so what this means is this right here. What this means is, I will draw it out actually, just to make sure it makes a lot of sense. And these rules are set in stone. They are set in stone for me, and I'm just introducing a few rules at a time. So now we're going to draw our 5-wave structure like that, okay? Now what we see is this one here retracing only 382, right? 382. So what are we going to assume, guys? We're going to assume that wave 4 does not retrace into the territory of wave 1, and we will assume that if this one retraces a little bit, then wave 3 will retrace much more, or sorry, I mean during the wave 4 it will retrace much more, possibly to here. Okay. Now what we're going to assume first of all is, you know what? I should start from the beginning because I'm missing a bunch of steps and I want to make sure you guys understand it well. So this is your wave 1, that's your wave 2. Now what we have is wave 2 retracing only the 786 level. Now what we're going to assume is that wave 1, I'm going to write it out here. We're going to assume that because since it retraced a little, since wave 2 retraced little to 382, we'll assume wave 4 will retrace more to possibly the point of wave 2, but no more, and possibly like say 0.5 to 618 level, or but no more, and to at least 382 level, to up to 618 about, okay, up to 618 will retrace to at least 3.2 to say 618 or lower, but not possibly to the point of wave 2. Sorry, and possibly, okay, this makes sense now. Wave 2 retraces little to 382. We'll assume wave 4 will retrace to at least 382 level to up to 618, that's a magical number, or lower, and possibly to the point of wave 2, but no more. Now, because we have this one here, we will take our Fibonacci extension, and we take our Fibonacci extensions from point A there to point B to point C, and we will automatically assume that this one here can hit 100% to do a measured move, okay? And then now that we have this and it made the measured move, okay, we're going to go really, really far like that. Now we're going to assume that this one will retrace very much more, okay, to no lower than this point right there, because that's one of the corollaries that we have. Corollary, I forgot how we call it. It's one of the side rules, basically. Mathematics is what they call it. It's like an addition to a set of rules. So I have one here that will not go lower than that. So we know that this one, hey, what do you know? We'll just pretend it retraced it right here, okay? It retraced it right there, and that's where you get into your buy zone, right there. And then if, we're going to say if, this is a really important rule after, okay? If wave 3 hits 1-to-1 extension, then wave 5 could possibly hit 1618. Okay, it could hit 1618. And now this was the 100, right? And now we're going to assume that this one could hit up to 1618, all the way from up there, like that. Okay, it could hit a pretty big one. That's usually what we assume. Now these are some of the basic rules that I always follow, and I'm going to show you guys how perfect it actually is in a chart. So now we have wave 4 that completed, where we knew how to get our buy zone, right? And now we're going to take our Fibonacci extension from where wave 3 began to where wave 3 ended. Or sorry, not there. We're using from wave 1 already. Okay, we're saying that if wave 3 hits 1-to-1 fib extension, then wave 5 can possibly hit 1618 on wave 1-to-2 extension, this one right there. So now we know that this wave 3 right here hit it. Okay, we know that wave 3 hit it. So we're just going to draw our fib extension in here again from wave just 1-to-2. Okay, just 1-to-2. I want to make sure you guys can see this. We'll put this on the left side. Okay, put the left side right there. So this right here is the 161.8 level, right? So we're saying if wave 3 hits 1-to-1 fib extension, which it did, then wave 5 can possibly hit 1618. So now we're just going to draw a green box around the 1618 level as a target, and we're just going to slide it over, okay? We're just going to slide it over like that. And look at this. Surely enough, it almost hit it, guys. I would probably undershoot rather than overshoot, just like that, okay? And it's saying it can possibly hit it. And if you guys look very, very carefully, what you'll notice, oh, that's why I didn't hit it. I didn't actually choose the right point. Let's pretend I did that again. I was wondering why I didn't hit it. So let's say right there, the 161.8, just that level right there, we slide over, and surely enough, it actually hits it and nails it. Always undershoot rather than overshoot to be conservative and take profit, right? So there we go. That alone is very implicative of almost magic, right, guys? It's almost magic how that worked out. And I'm going to show you guys just one more example of how perfect, literally how perfect some charts are to play. And this one was, I loved it. And then after we have all 5 of our waves here going up and we hit all of our targets, guess what, guys? We're going to short it now we're going to short the sucker. Okay, we hit all of our targets, bang on that we hit it. And now that's wave 5. And if you remember from my rule, after we only take fib extension for waves 1, we only take fib extension for waves 3, but for waves 5, we take fib extensions from the whole thing, from waves 1 to 5, which is like that, the whole thing, okay? And now what we will do as a target is we're just going to assume a general range. Just assume a general range where, you know, it could be anywhere from here to here. It could be even more, but I like to assume a general range of 0.5 to 618. A lot of people will have different assumptions. So what I'll do, guys, I'll just actually, you know, make a big green box even before I see it. I'll just slide her down over there, slide her down, and then we're going to see if it actually hits it. Wow, what do you know? My orders got filled right there. My orders got filled at the 0.5 to 618 Fibonacci area. And because it got filled right in that area, boom, you would have wrote it up there because it got filled and there's panic. And remember, 618 is the magical number. You would have wrote it up and made it 9%. So let me put into perspective for you what 9% is, okay? If you invested $5,000, guys, okay? What is 9% of that? That's $450 times 0.09. That's a lot of money, guys. That is honestly a lot of money. Even if you played with $1,000, 0.9% is $90. I don't know about you guys, but I'm always happy with any amount of income, right? We always have to be happy with the amount that we have and never be greedy. So even if you had $1,000 and you use this simple little strategy of Fibonacci extension and retracement, you would be doing very well for yourself already. And it was one of the first things that I learned because I have an obsession with Fibonacci and I also have an obsession with Elliott wave, as we all know, right? And then surely enough, we lulled for a while and we're still lulling, right? And it finally broke out just a tiny bit there. It's definitely making some ground, but that's how you would play that perfect wave right there. Let's see some more examples, all right? Alrighty, so we're gonna look at Neo. So let's just do a quick recap before we start. So Fibonacci extension goes like this. You have a top and then you have a bottom. It finally reaches it. What you're using it for is a possible target. A possible target choosing from the first point to the second point to the third point, like that. And we're always gonna shoot, always, no matter what. Everybody assumes the same thing, and when there's a mass consensus, people cause rallies, right? If everybody thinks the same thing, or in similar ways, then rallies can occur because of this. Now, we might not always get it, you know, so I like to shoot under just to be conservative. I might even go 786 level like that. So if I clone this right here, not that guy, if I clone this right here, this will make a 1-to-1 extension, right? It moves the exact same distance in terms of price action as the first wave. So this would be going up to like that, for example, to make a 1-to-1 move. Another rule is that if this one retraces a lot, right? If it retraces a lot, then the next one coming down over here will not. Okay, so if this one retraces, say, all the way to the 618 level right there, right? 618 level, and this one's 1-to-1 move was obviously a lot less there, so the 1-to-1 would be around there. If that retraces 618, then we will assume that this one right here will not come down as much. And that's really important to remember. This one will not come down as much, and it never overlaps this territory right here. So now that we have some of the basic rules out of the way again, we're now going to identify the top and a bottom. So the way I see it, and this is important to be able to identify it as well, right? Before the impulse. So I see it as right here, first of all. I'm going to choose the bottom, say from around here, okay? Just so that's the previous lowest point, say. Actually, I can even go here. Nah, let's just go from here. So from here to here, and the next lowest point is right there. So being able to identify where to begin and where to start, that is something that you guys will have to practice day in, day out. And it's not something that's going to come natural the first time, right, guys? So when people are asking me, oh, am I doing it the right way here and there? You'll know when you're doing it the right way here and there, because it's just going to take lots and lots of practice to identify where the trend starts and where the trend ends. So I will take now my fib extension, or sorry, fib retracement right here, right there. And what do I know about this one right here? So this one right here, I notice right here that it's retracing a big amount, right? So let's make a note of this right now. We note that wave 2 retraced heavily. Therefore, wave 4 will not retrace a lot. Okay, these are very, very important guidelines to follow. Alrighty, now that we have this identified, so we're going to keep this in mind, this rule, okay? Wave 2 retraced heavily, therefore wave 4 will not retrace a lot. And now we're going to take our trend-based fib extension, and I want to introduce another rule for you, okay, as target 2. And now these rules are fairly good, and they're fairly set in stone to me. And this will take a lot of experience, okay? It will take a lot of experience to get used to, and we always have to rely on our indicators to give us a general idea of where it can be, okay? And the rule goes like this. If wave 3 highly exceeds 1-to-1, okay, it breaks through it, it can possibly reach 1618, okay? That is a rule that we follow. It could highly reach, and then if wave 5, or sorry, if that happens, if the above happens, then wave 5 can possibly reach 2.618 of this original extension. And now another possibility is this, okay? If the above happens, two possible cases, okay? Like can happen. Case 1, then wave 5 can possibly reach 2.618 of wave 1 to 2 fib extension. And then there's case 2, where wave 5 can possibly reach 1-to-1 of wave 3 to 4 fib extension. these are really important rules to follow as well that I always follow, okay? And they are rules that have made me a good amount of profit, we'll say, okay? So this one here is wave 1. This is clearly wave 2, right? So we're going to assume a lot of things first. So we're going to assume that this could be our first target, right? So after you've identified that as the bottom and you bought into a long position, you're going to basically do two things. You're going to take a profit there, and you're going to use this as your target 2 as well. So now what I'm introducing is two things. We're going to use this as our wave 3, target 1, and we're also going to use this as a target 2 in general to see where it is, okay? Now identifying waves is really important, okay? So I'm going to, no matter what, I'll always close my position at target 1. I target at target 1, even if it's still only wave 3, okay? Now watch this, okay? So I'm going to try to close my position at target 1, and we're going to see if it hits it. Surely enough, it hits my target 1, right? Target 1 right there. That's kind of cool. This is Neo, by the way. Okay, it hits my target 1. Look at this. Right? Cool. Isn't that pretty awesome? So now wave 3 didn't quite get to 1618, so I took my profit there, right? I took my profit there, but that would have been too early because we would have noticed that this is actually still all of wave 3. So I would have missed catching that top there, but that's okay. That's okay. Now I know that this is basically wave 3, right? This is wave 2 that finished right here. This is 2, and now I know this is wave 3. Now we're going to refer back to some of our rules, okay? We're gonna refer back to some of our rules. So now let's say we knew already right here, guys, that we knew right here, okay? Sorry, I'm messing them up. We know that wave 2 retraced heavily. Excuse me there. Wave 2 retraced heavily. Therefore, wave 4 will not retrace much, okay? So we're gonna draw basically our Fibonacci right here. Just pretend we don't see it. And we saw that just that as a top where we identified it after using all of our indicators, okay? So we're gonna just draw our Fibonacci retracement tool from beginning to end. We'll clear all this up. I'm drawing it wrong. It's from top to bottom, actually, or bottom to top, I mean. Because now when we trace heavily, I will automatically assume that this one will not at all. So I'll put my buy boxes even between 236 and the 382 level, right around here, right around there. And I'll just move it over. And what I'm going to see, based on my rules, boom, based on my rules, they get filled, right? Based on my rules, it absolutely got filled there because I knew that this one retraced heavily. I now know as well that this one will not retrace a lot. So we're using a series of deductions, right? We're using a series of deductions and process of elimination to get a general idea of what happened in the past could possibly affect the future. And that's what I trade heavily based on as well. That's why I'm constantly analyzing data as it comes in. Because what I always try to tell people is we react to the information coming in rather than try to predict. We react to it and then we make assumptions based on science. To me, this is a science and this is an art and this is a way of hypothesizing, right? When we hypothesize, we make an educated guess of what could happen, right? And then we perform the experiment, right? And then we have a conclusion at the end. And this is absolutely no different than what a lot of students will go through as well, for example. It's a method of deducing what's going on. So now that my order filled right here, okay? My order filled right there. This is now, so there's two ways to look at it, okay? There's two ways to look at it. We take our fib extension from wave 1 all the way to down here, and we do what I mentioned, okay? We have a target box of the 618, always undershoot it, okay? Always undershoot slightly, just like that. And now the second thing we do is the case 2 can possibly reach one-to-one wave extension of reach one-to-one of wave 3 to 4 now, okay? So now we just took wave 1 extension, which we got the 1618 level, and now we're going to introduce something else. We're going to introduce the wave 3, because we also have wave 4 now. And this part you guys might need to rewatch a few times. So now I take my fib extension of wave 2 to wave 3 to wave 4, right? End of wave 2 to the top of wave 3 to where wave 4 is right here. And what I do is I get now an average range, okay? I get now an average range, right? I get an average range. So if this was the bottom there, after I bought in there, I will actually create a target box for myself up to one-to-one, a big box right over here. And I will move it over just like that. And I will sell as soon as it hits here. I'll read all of my indicators and I'll make sure that I get a general gauge of where these possible target zones are based on these magical ratios called the Fibonacci extension and ratios and retracement levels. So that is kind of how we use it in a nutshell, guys. Watch this video a few times and it's going to be mind-blowing how beautiful these relationships are. I just want to give you guys a super, super clear example of how we can use these measured moves to find out exactly, guys, how much it's going to go. So there you guys have it. I hope you enjoyed this very basic Fibonacci extension and retracement video of mine. If you guys absolutely loved it, make sure you guys like, subscribe, share, upload, etc. And you guys all know my dog